Alright everybody, thanks a lot for joining me on this Tuesday afternoon market recap. I do believe this is at least the first recording that I've left you with since, I think, Thursday as of last week. On Saturday just gone, we had a really good talk in that pro analysis class as to what is happening and what we expect to happen, right? Not only over the next week or so, but also more so into 2020 and how to begin thinking about and positioning yourselves for that. Let's just take it back a step, however, and talk about what is transpiring or what has occurred over the past two sessions. On Monday, we were left with that sort of pseudo, right, shooting star candlestick over here. Again, that of a reversal candlestick. It wasn't all that surprising to see this candlestick. The reason for that was because of this open gap which set up between that of Thursday and Friday as of last week. So very similar to what we saw. This is going back to Tuesday last week. That was the 1st of October. You can see over here that we have a nice differential between that of Tuesday and Wednesday's candlestick, whereby we were expecting the markets to bottom, to reverse, and then to gap close this open window. Now, we were hoping at least that this was going to take place without a gap, right, in the opposite direction. The reason for that is because it would allow the markets themselves not to actually have to come on back down and to reclose, right, the established gap, to actually close the gap going back to the 1st of October. Well, surprise, surprise, or essentially, no, not really. Thursday and Friday last week it set up. Yes, we do have an open window, and it's no surprise between that of Monday. And as at today's candlestick being the close at Tuesday, the S&P 500 down 45 points. Now what we've done is we've closed the window going back to Thursday the 3rd and that of the 4th, okay, Friday the 4th. But now in the process, surprise, surprise, we've just established another window, all right? This is absolute mayhem at the moment between that of Monday and also Tuesday. So these markets, again, they continue, right, to sort of act like a Richter scale, so to speak, or like the pulse of your heart, right? Going back and forth, up and down when they put you on that medical machine. We are all over the place. This market, or at least these gaps that we are hoping are going to fizzle out and they are going to sort of move back into a normal sort of state. It hasn't occurred yet. The good news is we've closed this open window. Again, this takes us back into our original discussion that we were having last week to identify and to see that reversal, but at the same time, we do not want to see another, big gap out of this reversal area, pretty much where we're closing out on the S&P 500. 2,893 points is where we closed at today. All right, another dark long day Mobozu type candlestick. But again, we've got another open window. We want to see the windows close, and once they close, we want to see the volatility, right, begin to move out of the market, whereby we don't continue to print gaps, right? Gaps that essentially need to be closed, and then of course you get that sort of that slingshot back in the opposite direction to close it, but at the same time reestablishing another new window. It's never fun. What we are obviously identifying is that this market, it continues to be volatile. You can just see by the amount of gaps. I mean, if you just have a look at this market, gap, I'm just going to start printing them out for you. You've got a gap just here, right? Another gap here. You've got another gap here. And then you've obviously got this gap, and now this gap. I mean, I cannot really remember a time where we have actually printed so many gaps in the space of maybe, 2 or 3 months. So again, you have to be a little bit sort of a little bit calm, so to speak. Again, patience is a virtue in these types of scenarios. Don't go overboard. Don't go looking right at this point to go out and just and shore up a bunch of long trades. I do very firmly believe the market is still going to take that directional move, however, we are still producing a series of gaps. We hope these gaps are going to evaporate. They're going to disappear, hopefully sooner rather than later, which is going to allow this market to finally base and then to just see it just casually drift on up higher over the coming months. Here's the chart of the Dow Jones Industrial Average. Again, a nice upper wick on today's candle. We pretty much closed it, and also at the same time, we closed the open window between that of Tuesday and Wednesday as well. Sorry, Thursday and Friday of last week as well. I'm just getting my days right because, again, we're looking at consecutive weeks whereby we've got open windows. We've closed that now on the Dow Jones Industrial Average. And at the same time, unlike that of the S&P 500, we've pretty much closed the gap between today's session and yesterday's session. So if you're looking at a realistic market whereby all the gaps are closed, and when we talk about our hopes that we're not going to reestablish open windows, right now you should be focusing on what the Dow Jones Industrial Average does. In the past and during the period of September, right, the Dow Jones Industrial Average was the last of the three markets to close this gap over here, taking us back to the very early sort of stage of September. We very quickly broke below this. Now we're sort of neutral again based on the closures of the gaps. The Dow is one of the markets of the two so far that is poised to, one, not create a new gap, and two, begin to push out of this support area whereby we've seen the hammer candlestick set up going back to Thursday of last week. So very important here on the Dow Jones. Again, these markets all over the place, but I'm just doing my best to recap them for you. And again, just sit in there tight, be patient, and eventually this is all going to settle down. Here's the NASDAQ. Again, similar, or at least very similar to the Dow. We do not have any open windows at the moment. Okay, so we did have this window again going back to Thursday and Friday last week. We spoke about this over the weekend, and in that of the weekend class, we've now closed it. Very similar to what we did over here. We've overshot the window. Okay, so we pushed beyond it. You can see we've pushed beyond it just here on the NASDAQ as well. Now we're coming back down to retest again this hammer support. As it stands, we've still got a series of a higher low relative to where we were only last week as well. Yes, this dark candlestick, it's never nice to see the market down 1.5%, 132 points. However, you saw that quick reversal take place last week. Again, I'm assuming we're going to see a very similar type of, reaction out of the support area as well. If you bring up the oscillators, you can see that they're starting to flick up. We're back down at that support area. And the good news is that, again, the NASDAQ and the Dow Jones, they've run through the gap closures of, or at least on their respective charts, which is fantastic. The NASDAQ has still got a little ways to go after today's session, but you can see very firmly that we are still printing a series of high lows, and this candlestick right here is very important. Obviously, there is a lot of news happening out there in the world. Obviously, the escalation once again with China. All right, the trade wars is not really all that much sort of favorable or positive news. Coming out of that, we've got talk again of the Fed sort of secretly, or like non-officially anyway, doing QE, which is essentially starting up, I believe, next month now. The markets themselves, they reacted a little bit today. However, again, the China headlines took over, and as such, we closed negative. So we're going to see whether or not that's going to have, or at least if it will offset that of the initial sort of reaction, probably negative reaction to that of the trade wars. So again, there's a lot of things happening fundamentally. What we are paying attention to as we do are some of those fundamental metrics that we recapped over in the Saturday class. They are going to, at least for us, they are truth, right, mixed with the technical picture. And the next set that we are going to get will be next Thursday, next Friday. That's when the LEIs are going to come out as well. So as it stands right now, just sit through this volatility, right? We'll obviously recap what happens tomorrow as at Wednesday, but right now, all right, this market, just allow it to sort of base out, especially in terms of the S&P 500. It now needs to close this open window. But the exciting thing is, all right, just to sort of reiterate this one final time before I say goodbye, is that these gaps are now closed completely on the industrial average and also on the NASDAQ. This is a scenario now that we haven't been in for quite some time, whereby it's all done. I mean, there's nothing else to wait for. In the past, we've been waiting for certain gaps to close, and then once we fill, or at least close those gaps, we immediately reopen other gaps. Then we're sort of in this waiting period to close them. But right now, as at the close on Tuesday, it's done. All right, so I'm hoping at least that we're not going to see any, right, relatively large gaps, or at least real body gaps, that we are going to have to close once again in the future. I'm hoping that we are going to begin opening up relatively unchanged, and we're just going to see general trading activity persist, all right? And that's going to be to the upward direction. All right, so I'll be back with you tomorrow. On that note, everyone, I'm going to say farewell, and just hang in there for the time being. All right, all the best. It's James signing off on behalf of Pivot Point Trading. Farewell.